The Fibs. I've had a couple people ask me to do a quick vid on the Fibs, so let's do it. If you are new, welcome. If you are not, welcome back. When I say Fibs or the Fibos, I am referring to the Fibonacci tools used by traders. Some price action analysts will use this tool to find support and resistance. Others will use it to find targets of a market making new all-time highs or new all-time lows. The Fibonacci sequence is a set of numbers that starts with a 0, followed by a 1, and proceeds based on the rule that each number is equal to the sum of the preceding two numbers. For instance, if you start with a 0 and add a 1, the answer is 1. If you then take the answer of 1 and add it to the preceding number of 0, then you will get 2. If you take that answer of 2 and add the preceding answer of 1, you will get 3, and so on and so on. For an example, the first 10 Fibonacci numbers are 0, 1, 2, 3, 5, 8, 13, 21, and 34, and they will go continuously forever. In addition to the numbers themselves, you will also see the same ratio between the Fib numbers. For instance, if you take 34 and divide it by 21 on a calculator, you will get a mean, or an average of 1.618, or 1.618. This is called the golden ratio. Now that we know what the Fib sequence is, here is all of the Fib tools. And as you can see, there are a lot of them. I am not going to explain what each of those are or how they work, but for the scope of this video, we are going to focus on two of those tools. They are the Fib Retracement and the Fib Extension. Now in TradingView, the tools themselves come with default settings, or the default numbers. You can customize them with numbers that are not in the Fib sequence if you so choose. However, I would not do that. I would just leave it at default. The Fib extension is a tool that is developed for targets for new all-time highs or new all-time lows. It depicts these targets by finding a price swing that will have a decent expected move and throwing out future targets. The way to use this tool in bullish markets is to find a relevant swing low, dragging up to a relevant swing high, and tack it to the pullback move or the correction. So in a sense, you're drawing a half arrow in the direction of the desired targets, and voila, you get future price projections. And vice versa for bearish all-time low targets. The Fib Retracement Tool, my favorite, is used to find specific retracements inside of a price range. It can be used to find the possible correction lows in an uptrend or find the correction highs in a downtrend. I do not use this method often. However, I will use it to see if the retracement tool aligns with my price levels that I look for to see if price could potentially turn there. If the retracement aligns with this target, it just offers more confluence. Now there are thousands of YouTube videos describing and explaining these tools. However, you are here to see how I use them. So let's dive in. There are 4 popular Fib numbers that the retracement tool focuses on. These numbers are the 0.236, 0.382, 0.618, and 0.786. The popular method is taking the bulk of a major move and applying the Fibs from high to low, or from low to high. Now this method can be useful to newbies who do not understand the concept of support and resistance. The reason I do not use this is because I have a different style than most YouTubers, and also the chart looks busy and disgusting. Disgusting. I look for my price levels where I think price may turn. Now you have seen me deploy this tool similar to those other YouTubers, and the reason for this is so that I can show you, my audience, what they are looking for and also what others may be looking for. However, I do not use this tool that often. I want to make this very clear. I have sharpened my edge in the market in such a way that I need very few indicators, if any at all. Here at Trade Talk, we are focusing on the current building price range. We are trying to find areas the trend may continue inside of the main range. So since price is always moving, weekly and monthly highs and lows do often change. While following price inside the monthly, you can use the tool by first looking at the current trend. I only focus on the last 3 candles, so in this example, you can see the last 3 candles are looking to move lower. Last month was a bullish doji, the previous month was a bearish engulfing, and finally the third candle appears to have made a high. So it looks like price is moving lower. Now I would then take the Fib retracement, start from the high, tack it to the current low. For this example, I have used the bar replay tool to show you the low that I was working from. Now you can see the current monthly range has taken out the previous month's low, and we are looking for that trend to continue. So we want to see price pull back to the 50% retracement, which is not a fib by the way, or the 618. In my strategy, I try to find my supply or demand levels that would be close to those two fibs. In this example, that was all the way down to an hourly time frame, and there are two Heath levels that are close to both of those fibs. I must preface this by saying this does not work always. Everything works in trading, just not all the time. So by playing the bar replay back using the 8-hour, you can see how this would work. Now in this case, I did indeed take an entry, but it wasn't at the exact touch of the 1-hour Heath level along with the fib. I wanted to see rejection at this area. Once I did get the rejection, I am now looking for entries that fit my rules-based strategy. I did also call this trade out inside of the Trade Talk Discord, so all of this played out in real time, as does all of my trades. I was aiming at a possible hourly demand zone below that day's low, as that was a nice target, thus giving me a better risk to reward. Usually when I place my entries, I'm looking for that well-timed and placed entry to take a good daily range expansion trade that has the potential to be a weekly and possibly even a monthly range expansion, as by the time my daily goal is achieved, I take the majority of the risk off. This way I can stay in these potential positions longer. That example was of the most recent trade that using a fib retracement can be beneficial. In closing, I just want to say this. Like I said earlier, when a weekly or a monthly range is in the process of being built, your fib levels will change when new highs or lows on your current time frame happen. For this reason, newer traders may have difficulty using these tools in this way. And that's okay because you're here now, and I have completely found a way to help you to simplify your trading. So if you like the vid, please hit the like button. I put out live content 3 to 4 times per week, so that way my audience can ask me specific questions to help them build their own profitable strategy. If this sounds good to you, then go ahead and subscribe. Also hit the bell icon so you can get notified when I do indeed go live or drop little jewels like this one. Thank you all so much for your time. Make sure you trade safe, make sure you trade smart, and as always, happy trading everybody.